Hello guys, welcome back to another price action video, and today we're going to be talking about the concepts of support and resistance and how you can make good trading decisions. This trading decisions you're going to be making is going to set you apart from a lot of traders out there because of the model of entry. Your model of entry is going to change for the better. You are going to be taking fantastic trade. You're going to be taking like classic trade. Your entries will be different from a lot of traders out there who does not like who have not mastered this concept of trading. When you master this concept of trading and understand how the market moves and how it works and why it does certain things, you are going to set yourself apart from a lot of traders out there. So let's get into it. So we have a market coming all the way from this turning point, which is a swing high right here. So we have a swing high right here. If you have not watched all my previous videos about swing highs and swing lows, I advise you to go do so on this price action because they are. So we have the market from this price level. Let's start from here, which was a previous support. The market went all the way up here, creating a resistance at the top here, which is a swing high. It might not be a standard swing high, but I'm just going to say a swing high right here. So the market pushed to the downside. Maybe this POI, you have been waiting for it. You have been waiting for the market to come to this higher time frame point of interest. That higher time frame point of interest must be an order block or a swing low. I've taught you guys how to mark your swing low, and I taught you guys on the previous videos that higher time frame swing highs and swing lows has higher probability of the market respecting them. Take for example the daily time frame swing high and swing low, or the 4 hour time frame swing high or swing low. Are you getting it? So moving forward, I want to understand how you can now take your trade entries, because the market will love to do its thing, and if you're not smart enough you might end up losing it all. So I forgot to add this price level. There's always going to be something where this is going to cause this resistance. So let's call this place or this price level right here, which is cause this resistance, let's call it a fair value gap, or we're going to call it a low probability order block. Let's say this price level right here that is causing these rejections you see here. So whenever the market comes to your POI, there are already orders there. There are a lot of traders that have set or placed orders there. These are traders that do not understand how the market moves. These are unprofessional traders. These are amateur traders. You do not want to trade like these traders. You do not want to be like them. You want to be able to make good trading decisions because of what you have watched the price action cause the arc. You have watched these videos. You get it. So when the market comes to this POI, a lot of traders jump into the market. If you notice, you will notice that if the market start buying from this their POI, these early buyers, the market might start moving shaky. At first, it will seem like it wants to go up. Then you see this delay in buying, the market goes up, comes back, push all the way up, reacts like it wants to buy, then gets to this fair value gap or low probability order blocks. Low probability other blocks are these kinds of other blocks that has this long wicks with tiny bodies. You know, a standard other block has to be with full body candlestick, at least a reasonable amount of body candlesticks, and maybe on a higher time frame, you get it. On a lower time frame, you get it. But you see those ones in between this range, you see those ones in between this swing, you feel this ones from this swing high to this swing low. Those ones in between them most likely are low probability other blocks, and the market only respects them once or twice. The market only respects this low probability other blocks one or two times. So note that the market respects low probability other block one or two times. So if the market comes to it, you can see that the market starts selling from there immediately. This is to show you that the market is respecting that resistance. That place has turned a turning point. So remember what we discussed. We talked about turning points in the market. The market has now created a turning point in the market. Once the market has created a turning point, it will create a standard swing high at that price level. Why is it creating a standard swing high? This is where you need to understand something. If you remember when the market was moving this shaky movement, the market is creating liquidity for itself. It has grabbed the buy side liquidity at the top here, leaving the sell side liquidity behind. Who is it leaving it for? It's leaving it for early buyers because it's going to be taking them out. Smart traders want to wait. You do not want to enter in all of this madness. So the market's coming down once. Remember, it has created the first touch. Take note. The market's coming to this POI at the top here, this resistance right here. It has created the first touch. Coming to it the second time, creating the second touch. If you want to be shorting it from here to here, this is where you're supposed to enter from. If you want to enter from here, you could more likely enter this trade from here, going back down to the swing low. So that is why most of you guys who know me on TikTok, you see me taking two trades from my POI. I normally take this trade because I've already understand how the forex market moves. I've understand how this all of this concept how it moves. So you can see that the market will create this double top right here, that thereby understanding, thereby showing you that the market will be breaking this price level when it comes back to it. So creating this double top, it has created two touches. Two touches is good to go. If the market comes back to this price level, it's definitely going to break out. So when the market drops down to this price level, it is thereby grabbing liquidity. So you have shot the market to this price level, taking money from out of the markets by milking the market. The market goes down, grab the liquidity here, liquidity here, liquidity here, thereby taking out early buyers. So early buyers who are not smart enough to understand how the market moves have been taken out of the market. So this is where you want to enter. You want to mark the last red candlestick. The last red candlestick at this price level, you want to mark it out from the candlestick wicks. That is what you want to mark. The top of the candlestick wicks, you want to mark it out. You want to mark it out. You want to mark either the low or the high. You want to mark the whole red candlestick, the last red candlestick, at least on the 5 minutes time frame. The whole red candlestick, because the market is selling. So the red candlestick, the last red candlestick there on the 5 minutes time frame, you want to mark it. You want to enter at the tip of the red candlestick. Make sure you set your order at the tip of the red candlestick. So if you notice, this buy to the upside is different from this buy. This buy is moving very shaky. It is not smooth enough. But when you see when smart traders and professional traders are entering the market moves with this great speed. So look at it very properly. Look at the market from here to here. Then understand that you need to be taking this kinds of trade. It gives you this peace of mind and sets you different apart from a lot of traders. So remember, this price level has turned a resistance. Are you getting it? It has turned resistance. So getting to this price level right now, we have a new resistance and the market created a double top. Coming to this price level, this is where you want to enter. You don't want to enter here because a lot of traders will want to jump in and enter from here. You want to wait for the market to come back to this price level, and you want to make sure this marketplace has have like two touches, and the market is good to go. Because why? Your bias is bullish for that day. The market comes back here, create a double bottom. You want to enter here, 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 and enter here. So this is where you want to enter the market from. You do not want to enter here, do not enter here, do not enter here. Do not be amateur traders, do not be the early buyers, do not be the early sellers. You want to be the second traders. The second traders are, you see, is when the market will be leaving these long candlestick wicks. Those long candlestick wicks. Why? Because it has grabbed liquidity, it has swept early buyers. Early buyers have been swept. So you want to be among the buyers sweeping early buyers. You want to be among the sellers sweeping early sellers who sell from here. The market goes up, sweeps them out. The same right here. You want to be among the early sellers. You want to be among the second sellers, sellers who sweep early sellers. You get it? So these are early sellers who sell to this price level. Let's say here. and the market comes down, sweeps them out. First of all, it sweeps them, grabbing buy side liquidity, takes them out again one more time, grabbing sell side liquidity, coming down to this price level, tapping to this price level properly, creating a double top, double bottom right here, and pushing to the upside. So resistance has now turned support. Remember, initially this was a resistance level. Now it has turned support. So what am I trying to say? You want to see these chart patterns form at key levels. You want to see these chart patterns form at your POIs. You want to get these chart patterns. If you do not get a confirmation of these chart patterns, do not enter the market. This way, you are going to set yourself apart from a lot of traders out there. You can also apply this concept for a downtrend. So this concept is for a downtrend and also for an uptrend. So if you are selling the market, try as much as possible to get your double top or double bottom confirmations. Remember, do not be among the first buyers or first sellers. Thanks for watching.